My name is Andris Berzins. I'll be the moderator for this seminar and panel discussion. For those of you who don't know me, I know some of you in the room, but not everyone. I'm a graduate of the Stanford Business School from the class of 1998 and have spent the last 10 years working in high-tech startup businesses in the US and Europe. Currently Chief Marketing Officer at Live Bookings in the UK, and leaving next week to do my own startup based in Latvia. My formal role here today is representing an organization called LABACA, Latvian American Business Association of California. Is a recently formed nonprofit to help startups in Latvia connect with the Valley, get benefit from information and knowledge from the Valley, and to help their businesses grow. So it's wonderful to be back at Stanford, and to give you a quick idea of what this session is about, I have two images here. We'll talk a little bit about how Latvia survived the economic crisis, the growth potential that is there now. And before we start that, I will ask John Roberts to make a welcome address. And let me introduce John to those of you who are not familiar with him. He's familiar to everyone in the Stanford community, but not the others perhaps. So John has been a member of the Stanford faculty since 1980, when he joined the GSB from Northwestern University, where he had been a professor at the Kellogg School of Management. He's the author or co-author of over 70 scholarly articles, more than 30 business cases, and 2 books. His teaching at the MBA Sloan and executive programs has focused on strategy and organization, with special attention to multinational business. He's also held visiting positions at universities and consulted major corporations all over the US, Japan, and Europe. He's a fellow and former council member of the Econometric Society, was elected fellow of the American Academy of Arts and Sciences in 2005. It is a special pleasure to work with John Roberts on this event. He's helped organize this, and I had the privilege of working with him between the 2 years of my business school, helping write, I think, 2 of those 30 case studies that you've worked on. And my favorite memory actually from then is interviewing John Brown, then CEO of British Petroleum, who we met with and interviewed for that, with him smoking his inch-thick cigar and with his feet on the table. It was quite an interesting event. So, John, thank you very much. If you could welcome everyone.
Thank you, Andris. I'd just like to take a moment, first of all, to welcome the Latvian government members here, and to welcome each of you to Stanford. We're delighted to have the opportunity to be hosts for this event. In fact, the event was organized by our staff in our Center for Global Business and the Economy, not in our Entrepreneurship Center, because we are looking very much to extend our connections to other countries and other parts of the world as a way to prepare our students for lives in a global economy. So the opportunity to connect to Latvia is something that we relish. The other thing I'd like to mention is talk just a little bit about what Stanford Business School does in the arena of helping entrepreneurs. Is that appropriate now?
Right.
Okay. So Stanford Business School and Stanford Engineering School, from which you'll also be hearing, have been the source of much of Silicon Valley's ideas and people. And here in the business school, we've traditionally taught entrepreneurship classes to the MBA students who, and these classes are typically taught by a Stanford faculty member cooperating with a entrepreneur or venture capitalist from the Valley, so that we get both an intellectual and a practical element to the courses. In the last couple of years, we've started, and then we have a Center for Entrepreneurial Studies that does outreach to the Valley and supplies some support for entrepreneurs. But in recent years, we've developed educational programs for other than our MBAs. And in particular, this summer, we're running the Stanford Institute in Entrepreneurship, which is open to graduate students not in business from Stanford and other universities. And they come here for a period of time, and we give them a basic business education. So these are engineers and physicists and microbiologists who come here and learn business and learn entrepreneurship. And we're also running a program, a part-time program, for a mix of Stanford students and Valley entrepreneurs, Valley technical people who don't have a business background. And again, we're attempting to give them the business background to help them get going as entrepreneurs on the basis of the ideas they have as engineers and scientists. So if any of you are interested in that latter program, it's called the Program in Innovation and Entrepreneurship. Look on our website. And I've talked enough, and let's get going with the program. Thank you.
The keynote address today will be delivered by His Excellency the Prime Minister of Latvia, Mr. Valdis Dombrovskis. Mr. Dombrovskis has bachelor degrees in both economics and physics, as well as master's degrees in physics and customs and tax administration, degrees earned at the Riga Technical University and the University of Latvia. He's also studied at the doctoral level at the University of Maryland. He served on the Monetary Policy Board of the Bank of Latvia for 4 years, following which he entered politics and then served for 2 years as Minister of Finance. After a change of government, he was elected as a member of the European Parliament. He returned to elected office in Latvia in March 2009 as Prime Minister, presiding over a new coalition government that had the unhappy task of picking up the pieces from one of the most dramatic economic crashes in the world. GDP dropped precipitously, and Latvia faced a bank failure and possible economic collapse. He pushed through a contentious and hard-fought IMF finance restructuring effort, and Mr. Dombrovskis then earned the distinction of being the only government leader to not only survive the financial crisis, but to implement a radical austerity plan and then to be re-elected as Prime Minister. Since then, he's documented his approach and thoughts about the experience in a book co-authored with Anders Aslund titled How Latvia Came Through the Financial Crisis. On behalf of the Latvian American Business Association of California, I would like to welcome Prime Minister Valdis Dombrovskis to this event. I would like to give him the floor now.
Thank you. Well, good afternoon, everybody. First of all, I would like to thank Stanford University for this possibility and for agreeing to host this event. Really, we will divide our presentation in some three main parts. One is on the recent situation as regards economy, as regards the finance, some basic macroeconomic facts, and then we'll go to the business opportunities, business environment, and things which actually make Latvia an interesting place to do business. Okay. So in this graph we briefly see Latvia's economic history since regaining of independence in 1991. And we see that during this period we had come through several crises, with the biggest being just after 1991 with regaining of independence, when socialism economy collapsed, capital economy was still not there, and there was a fall of GDP of more than half. Then we had a couple of other crises, like banking crisis in 1995. We felt implications from Russian crisis mainly in 1999. And then, since joining the EU and NATO in 2004, we had several years of rapid economic growth, with economic growth reaching double digits. So everything seemed to be just fine, but then with a global financial crisis and local factors I will go into, we faced possibly the deepest economic crisis in the world, with GDP falling between 2008 and 2010 by some 25%. Of course, it's always a possibility to look at the figures in different ways, and while a GDP fall of 25% may sound catastrophic, if you look at many other countries which lost some 2 or 3 years of output during the crisis, in case of Latvia, we also lost some 2 or 3 years of output, but as we had a double-digit economic growth, we also had a double-digit recession. So really after the EU accession, I think that's when the trouble started, and not because of the EU accession maybe, but really this was also linked with kind of Latvia's perception of the situation in Latvia. Since regaining independence, our strategic goals were to join EU and NATO. So in 2004 we joined EU and NATO. And it seems that now, once our strategic goals are achieved, nothing really wrong can happen with us. And for now on, we are only to have economic growth. And those figures seem to confirm this with double-digit economic growth. However, at the very same years, huge economic disbalances started to appear. First of all, this period of Latvian optimism coincided with a period of global optimism. There was also way too much optimism in global financial markets about everything. So as a result, we faced huge capital inflows on, for example, amount of credit in economy during the years 2004 and 2007 increased 4 times. So all this capital had to go somewhere. So we had a huge raise of wages. We had a huge raise of asset prices, mainly in real estate sector, construction boom. Our inflation, consumer price inflation reached double digits. So really we saw that our economy was badly overheating. Current account deficit in some years reached more than 20% of GDP. And conventional economic wisdom goes that if your current account deficit exceeds 5% of GDP, you should start to worry. So our current account deficit exceeded 20% of GDP, and at least that time government was not worried. So as a result, when crisis came, when a global financial crisis started, Latvia was basically cut off of capital supplies from the world. As a result, we faced a huge recession. In 2009 alone, we had 18% recession and corresponding fall in tax revenues. Say in 2009, tax revenues fell by 30%. And then you can imagine the budgetary problems we had, because even during the boom years we didn't have a balanced budget. And then if your double-digit economic growth turns to the double-digit recession, you can imagine what kind of budgetary problems you have. So budget adjustment we did during years 2008, 2011. Well, here it's written 16.3. In fact, it depends how you calculate according to different methodologies and different assumptions. These figures varies, but one could safely say it's somewhere between 13 and 16% of GDP. Out of this fiscal consolidation package, which was indeed quite unprecedented, some 1/3 was made on based on revenue measures, so tax increases, both indirect taxation, direct taxation, and 2/3 were done by reducing expenditures. To give some figures, for example, average wage in public sector during the crisis decreased by 25%. Average size of the ministries was downsized by some 30%. Number of agencies, government agencies, was cut by half. So really, this fiscal adjustment was very, very substantial. Based with this 18% recession, of course, real estate bubble burst and property prices in some segments went down by some 70% from the peak values. And also banks started to have problems with non-performing loans in banks reaching the high point of 19% of all loans being non-performing in the third quarter of 2010. So really we had a huge crisis, and at that time the discussion among economists was, especially during the late 2008, mid-2009, that Latvia should devaluate its currency, otherwise it will collapse, that this internal devaluation path we have chosen, that this will not work. Paul Krugman famously said that Latvia is a new Argentina, so it took us some 2 years to prove that we are not a new Argentina, that we can actually come out of this crisis. And then when it seems that really we are able to come out of this crisis, economists started to say, well, even if internal devaluation will work, it will cause a lengthy recession. And it also turned out not to be the case. So basically we started to have economic growth already in second half of 2010. We returned, something new happened with the microphone, sorry. We returned to economic growth on year terms, and basically it took us a year between late 2008 and late 2009 to stabilize our finances and to regain the confidence in financial markets while keeping unchanged exchange rate of our national currency and doing fiscal adjustments and structural reforms. So basically I touched briefly on this issue related with financial stabilization, while of course many economists would say that all this fiscal adjustment we did served as a large fiscal anti-stimulus, and which is certainly true. So we also needed to do something to stimulate our economy, and basically only meaningful funds we had available for this were EU funds, so from the European Union. In European Union you can receive some countries which are economically less developed can receive grants for the purposes of regional development. So we decided to accelerate the absorption of those funds, to reallocate them quite substantially towards support of entrepreneurship, towards support of export-oriented industries. And to the extent, one must say that we succeeded. For example, if you look at the export growth figures and industrial growth figures, so in 2010 we had a 13% growth in industrial production and 30% growth in exports. This year so far we had 14% growth in industrial production, and in the first quarter we had 41% growth of exports. So one could really say that this industrial production and exports are the factors which are bringing Latvia out of the recession. And again, a third probably direction of overcoming economic and financial crisis, which would be worth mentioning, besides fiscal adjustment, besides measures to stimulate economy, we also introduced what was called minimum social safety network, with a range of measures, especially to help unemployed, with extending payment period of all unemployed benefits, with raising guaranteed minimum income benefit, which is the one you receive after your unemployed benefit expires, and probably most important of all, a very large temporary jobs program. By the end of this year, some 100,000 people will have gone through this program, which is very substantial given that the size of our population is around 2 million. Okay, and here we can see the latest macroeconomic figures. We see this very deep economic crisis we went through, and already now we have returned to the economic growth. This year we expect something close to 4% economic growth, and next year we expect also at least 4% economic growth. So really we are coming out of this recession. And one of the factors which brought us in the problems was loss of competitiveness. So we see that our wage developments were more or less in line with our productivity developments until we joined the EU, and then the huge growth in wages started, which was not followed by productivity growth. And here we see that during the crisis we managed to again realign those two factors which are quite fundamental for competitiveness. So again, wage growth and productivity growth go more or less in line. Here we see some fiscal adjustment figures as it was distributed during the crisis, and probably important lesson to learn for this is that it's important to front load the fiscal adjustment, to do it quickly in order to restore financial stability, as the financial stability is precondition for economic growth. And as I mentioned, for us it took more or less a year to regain financial stability, and immediately we returned to the economic growth. This to compare with Greece, for example, they are already also more than a year in IMF program, yet they have not managed to restore this credibility vis-à-vis financial markets, and without financial stability, without this credibility, they will not return to the economic growth. And a year later, they anyway had to pass quite substantial austerity package. They were not willing to do initially, and basically they lost this year, and now there is even less confidence in financial markets about Greece than it was when IMF program started in May 2010. So really it's quite important to front load this fiscal adjustment to regain financial stability. And this also credit default swaps indicators which more or less reflect trust of the financial markets to the particular country, or represents insurance costs against possible default. We see that in 2009 during the crisis, Latvia was together with Iceland countries which were in trouble. But since then we have managed to restore trust of the financial markets. So now our credit default swaps are around 200 basis points, whereas we see that there are new countries which are facing problems like Greece, Portugal, Ireland, and so this situation is changing. So I will briefly stop here to having a very short presentation on what was happening in Latvia's economy during the last years, and how we came through economic and financial crisis. And now I'll head to the Andris Bērziņš to explain how great the growth potential for Latvia is. Thank you.
Thank you very much, Prime Minister. So I won't talk for long, but I do want to talk a little bit about this, especially for those of you who are not as familiar with Latvia, to give you some ideas of what's sort of happening there, and I think covering three key things. One is some of the activities and background for what I call the nurturing that has happened to help especially high-tech, IT-related businesses grow. Second is give some examples of the established players who are already there, two of which we have on the panel here. And then some examples of emerging startups from Latvia, which are the future larger companies that we want to nurture as well. So in terms of nurturing, the Investment Development Agency of Latvia, which is also present here, has worked closely with other government agencies, and there is something called the Polaris process. We've organized the way we handle foreign investment and try and help foreign companies pave the path more easily to be able to establish, whether it's a manufacturing center, an R&D center, or a marketplace entry in a more easy way, working with both central government, regional government, universities, and so forth. We also have a competitive IT workforce. So Prime Minister here talked about wages in general. So in terms of the relative costs of hiring programmers, it's an attractive position that we have now in terms of being able to scale that. And on the infrastructure side, a lot has been done in the last 20 years since independence in terms of creating a broadband infrastructure, and connection speeds are good, so you have the basic infrastructure for IT-related businesses to operate. And broadband penetration among consumers is high, and in some sense Latvia is one of the examples of countries that leapfrogged from some solutions that they could have had over that half a century of Soviet occupation to adopt new technologies that in some cases were well ahead of what you have here. So when I go back to Latvia, I pay my parking with an SMS, and when I come to New York, I'm surprised that I need coins to put into a parking meter, right? So you can leapfrog these things faster if you didn't have the infrastructure in the first place. On the institution side, so we have some universities, one of which is represented here, and industry and professional associations that support both larger companies and smaller companies in terms of growth and communications, and some legislation. So obviously the most important base was the accession to the EU, providing a solid legal framework that companies are familiar with, and innovations like the micro-company tax law, which is a special tax law applying to small businesses, allowing them a reduced administrative and tax burden in the early days, which makes it much easier for a startup to start to grow. And the streamlining of the incorporation procedures so that businesses can start up in a faster way. So if we look at the example of two examples of more established companies, Exogen Services, an outsourced development company, works in a number of industries, has about 1,700 developers based in Latvia and in other countries as well, but I think their primary base is in Latvia, and they've become a major exporter of IT services. And there are several other IT consultancy, IT services type companies which have done well, not just in the local market, but also in exporting. Tilde is an example of a company that's been working for quite a long time in the localization space, worked with a number of global players on localizing their products for the Baltic market, and has recently has partnered with Microsoft for the Language Shore project, which is looking at taking their specialization in localizing small languages which are spoken by not so many people, but there are many of those across the globe, and there are ways of leveraging that skill set for a global business. So if we look at some of the emerging startups, with some of the really small ones, brand new, and some that have already been around for a little longer. I'll give you some examples. Reachly, so this is a startup that I'm involved with, looking at doing a real-time Twitter semantic engine, which basically can filter tweets and actually feed up to hotels a set of consumers who might be potential guests that they can communicate with directly. A company called rentmama.com, which is trying to reinvent the way car rental is done, especially focused on the second tier of car rental businesses, by providing what's called a reverse auction, where the person renting the car makes a request and gets bids from the different car rental companies. You have Desk Time, which is looking at analyzing employee productivity. Mighty Fingers, this is a bunch of just graduated computer programmers who are developing a new platform for HTML5 social gaming, focused on real-time games. They were here in the Valley just a month ago. Came back very excited about their prospects. Molport, This is online rare chemical sourcing. They have a database of 9 million chemicals and a way to order them online. This is something which universities and other pharmaceutical companies find tremendously complicated if you think about it. The easiest way to summarize it, if you're a chemist and you want to search for a particular molecule, it's not something you can put in a Google search string. Right, so these are very long searches, so you need to think about a different way of searching and a different way of delivering these chemicals. VeriTweet we have here as well. That screen over there is the VeriTweet live channel. They're a microblogging service with visual functionality and a difference in terms of verification and authentication of users. And then we have two more examples, more established. So Real Sound Labs is a company that has a unique audio technology for measuring what's called acoustic power frequency response. It's basically improving the quality of sound coming from a speaker, and they have licensing agreements with Panasonic, Hitachi, NEC, and various other consumer electronics companies. And Vendon, vending machine management service that has been operating for some time and expanding globally. So just a little smattering of examples, and we have an emerging startup community that is growing and joining some of the more established companies.